Hi, we move to lecture video series 4. The key points of operating activities. Operating activities are the daily activities of a company. It's a core activity, it's a core business of a company. As we saw in the last session, key operating activities for a company include manufacturing, sales, advertising, and marketing activities. Cash flow from operations are an important metric used by financial analysts and investors. Operating activities can be contrasted with the investing and financing activities of a firm. Sale activities can include selling the company's own in-house manufactured product or products supplied by the other companies, as in the case of retailers. Companies that primarily sell services may or may not also sell products. For example, a spa business, in addition to providing services such as massages, may also seek additional revenue income from the sale of health and beauty products. Interest and dividend income, while part of overall operational cash flows, are not considered to be key operating activities since they are not part of the company's core business activities. These are operating revenues. Now we move to operating expenses. Expenses generated from key operating activities include manufacturing cost as well as the expenses of advertising and marketing the company's products or services. Manufacturing costs include all the direct production costs included in COGS. Operating costs related to advertising and marketing include the expenses of advertising the company and its product or services using various media outlets, whether through traditional or online platform. In addition, marketing costs include such things as appearing at trade shows and participating in public events such as charity fundraisers. Now we move to the comparing the operating activities with the cash flow statement. Cash flow from operating activities are among the major subsections of the statement of cash flows. It is separate from the sections on investing and financing activities. Investing activities refer to earning or expenditures on long-term assets such as equipment and facilities, while financing activities are the cash flow between a company and its owner and a creditor from activities such as issuing bond, retiring bond, selling stock, or buyback of stock. To get an accurate picture of a company's cash flow from operating activities, accountant add depreciation expenses, losses, decrease in current assets, and increases in current liability to net income, and then subtract gains, increases in current asset, and decreases in current liabilities. Investors examine a company cash flow from operating activities separately from other two components of cash flow to see where a company is really getting its money through operating activity. This slide depicts the example of cash flow from operating activity. Let's look at the cash flow details of leading technology company Apple Incorporation. The iPhone maker reported the following for the fiscal year ended September 2017. They reported as a net income of $48.3 billion US dollar. This is a net income, that is net profit of a company. Then depreciation, depletions, and amortizations altogether of $10.16 billion of US dollar. Deferred taxes and investment tax credit of rupees 5.97 billion of US dollar. Other funds included 4.67 billion of US dollar. By following the formula, the summation of these numbers bring the value for funds from the operations, that is 69.15 billion. The net changes in working capital for the same period was minus 5.5 billion. Adding it to the funds from operations gives the cash flow from operating activities Apple as from 69.15 billion. Subtract the net change in working capital, that is 5.5 billion, will get 63.6 billion if US dollar. That is the operating cash flow from operating activities. Thank you.